Hello everyone, welcome to the Science of Accountancy. We shall discuss today about the Mool Mantra of accounting, that is the golden rules of accounting. It is very important as this is the only concept which is being used by a beginner as well as a chartered accountant to do accounting. I think you have understood the significance of this topic. It is the fundamental of the accounting formulas, and as you know, to be an expertise in any field, one should have clear picture of the fundamentals of the same subject. Trust me, if you understand the subject properly, you will start to love it. Before we start, I must remind you to click on the like and bell button and also to subscribe the channel. So let's start. At first, we must have a clear understanding about the double entry system. Now, what is double entry system? Double entry system is a method of recording transactions. According to this system, entry will be done at least in two accounts, debit and credit, for each and every business transaction. To be more precise, a debit entry should have an equal and consecutive credit entry. By using this concept, we can satisfy the accounting equation, that is assets equals to liabilities plus equity. Now, what is golden rules of accountancy? This is basically a set of guidelines that accountants can follow for the systematic recording of the financial transactions. It is basically a theory that you have to keep in your mind as well as you need to understand. All the transactions in accounts are divided into three several accounts. All these accounts are different from each other in nature. You need to learn the art of recognizing the transactions falling under these three accounts and then need to recall the rules. First one is personal account. That is, anything that can be personified is under personal account. Example: capital, drawings, debtors, creditors, etc. Now these words may be unknown for you. Let us discuss. Capital. What is capital? Anything that is invested by the proprietor into the company is capital. It can be cash as well as any asset. Drawings. Anything that is withdrawn by the proprietor from the company except profit is drawings. It can be cash as well as any asset. Debtors. To whom goods are sold is debtor, or a debtor is a person or company or organization who owes money. Creditors. From whom goods are purchased is creditor, or a creditor, a person or a company to whom money is owing. Now you can easily understand that the said accounts can be personified. Like capital and drawings are related with the proprietor, who must be a person, and debtors and creditors also are person. In this connection, you should know that company and its proprietor has separate entities, and hence the company can be personified too. Now the rule is receiver is debit and giver is credit. Come, let's pass an entry. Paid cash to a creditor rupees 10,000. Now the most important part. Follow the 3-step method. Step 1. Read the transaction or problem carefully and understand the meaning. So here the problem is paid cash to a creditor rupees 10,000. It means we have paid rupees 10,000 to a creditor. Fine. Step 2. Find out at least two accounts in the transaction. Now we can find the first account is cash and the second one is creditor. Don't worry, it is the first time. You may feel difficult to find the accounts, but trust me, gradually you will learn it. In most of the transactions, you will find some common accounts after a certain time. Now step 3. Follow golden rules. We have learned that creditor is under personal account, and the rule for personal account is receiver is debit and giver is credit. And here creditor is receiving the cash, hence creditor will be debit. At the same time, cash is under real account and cash will be credit. We have not learnt about real account till now. We shall discuss it gradually. However, thus the entry will be creditor's account debit to cash account. The second account of the golden rules is real account. Anything that is your asset is under real account. Example, cash, bank. Here bank means bank balances. Land and building, plant and machinery, furniture and fixtures, etc. The rule is which comes in debit and which goes out credit. Now let's pause an entry. Deposited an amount of rupees 5,000 into bank. Now we shall follow the same 3-step method. Step 1. Read the transaction or problem carefully and understand the meaning. So here the problem is deposited an amount of rupees 5,000 into bank. Means we have deposited 5,000 rupees into bank. Step 2. Find out at least 2 accounts in the transaction. Now we can find the first account is bank and the second account that is hidden within the problem. We have deposited into bank. What we have deposited? Can you guess? Yes, it is cash. We have deposited cash into bank. So the second account is cash. Now step 3. Follow the golden rules. Here both the accounts bank and cash are under real account. And the rule is which comes in debit and which goes out credit. Here cash is deposited into bank. It means bank balance increases. Rather we can say bank comes in, so bank will be debit, and cash goes out as cash balances decreases, so cash will be credit. This type of entry is called contra entry. The third account of the golden rules is nominal account. Anything that defines income or expenses, gain or losses is under nominal account. Example, sales, purchases, discount, commission, interest, salaries, etc. Now see how an entry can be passed. Paid salary to employees in cash, rupees 15,000. Again we shall follow the same 3-step method. Step 1. Read the transaction or problem carefully and understand the meaning. Paid salary to employees in cash, rupees 15,000. Means we, the company, has paid rupees 15,000 in cash towards salary. Step 2. Find out at least 2 accounts in the transaction. Now we can find the first account is salary and the second account is cash. Step 3. Follow the golden rules. Generally we understand that being employees we receive salary. But be clear, here we are doing the accounting for a company, not for individual. Hence, from company point of view, we are paying salary. Hence, it is an expense and under nominal account. The rule is expenses and losses are debit and income and gain are credit. And cash, we learnt earlier, it is under real account. Rule is which comes in debit and which goes out credit. Here salary is an expense, so it will be debit as per nominal account, and we are paying cash, that is cash is going out, so cash will be credit as per real account. So it's all about the golden rules of accounting. Hope this video is useful for you. Please do like and subscribe for more such videos. For any suggestion, you can comment in the below comment box. Thank you for watching.